Hi everyone, this is Asa Bailey for Invest and Recover. We're navigating troubled financial times. The extent of the spread of the coronavirus has caused pandemic, a global and a humanitarian crisis resulting in loss of lives, jobs, reduced productivity, restriction on movement, and normality has been challenged big time. There has been an economic fallout which has caused severe financial constraints on other persons. This great lockdown evoked fear to invest, anxiety, panic, and misinformation. And this also caused further panic, which resulted in significant loss on investments, dampening investors' confidence in global economies. Quantifying the significant economic and social impact and the downside risks are complex and daunting. Exacerbating the situation is that there is no immediate solution, and we do not know how long this lockdown will last. So we have to focus to survive on this great lockdown, shoring up our investments and find ways to recover from the economic fallout. To recover, we must invest. In order to make our finances recession-proof, we must invest. The multilaterals have responded with loans. Governments responded with their social stimulus, security stimulus. But that will take some time before any of those stimulus trickle down and convert to any benefits for you and me. So we have to respond now to our situation. There are some investment opportunities for us to seize, especially investing through the stock markets. For those who have just started investing, say for a few months or up to a year, then your investments would have been beaten up badly by the crash in capital markets here and around the world. In March 2020 alone, I think the market went down at least on average 30%. So if you had invested maybe, say, for example, $1 million, your balance now would be just $700,000. That's not a comfortable position to be in. But for those who have been investing long term, the dent in your finances would have been less severe. Because if you had invested in the stock market, for example, you probably averaged 150% over the last 5 years, accumulated. So your investment advisor probably got hit by the COVID crisis as well. No one was spared the financial loss caused by the Great Lockdown. So right now, you have a lot of persons counting their financial loss. And then you have another set vowing not to explore investments anymore. And then you have another group just anxious, making plans for a financial comeback. Are you ready to recover from any loss that you have experienced in the market? You probably feel anxious about this, but here are some steps that we're going to have to take. In making a financial comeback and to recession-proof our finances, we need to think. January says, crisis and deadlocks when they occur have at least this advantage. They force us to think. So it's time for us to hit the reset button. We're in a position we have some time we can really think, and not just think, but think long term of a plan, a strategy, a long-term strategy that will help us to navigate these times. Investing long term in stocks, holding stocks for a long term will be richly rewarding, and I've seen where investing in the stock market gives a better return than the pace at which the cost of living has gone up. So we have a need, we feel like we want to quickly bounce back from the financial loss, but there's no quick fix. We have to be patient. You don't want to rush now into something and then you have another regret. So we want to be guided in a structured way. I'm saying to you, now is the time to invest. There are a lot of undervalued companies on the local stock exchange. And look at the prices, these prices are just too good to be true. But particularly on the Jamaica Stock Exchange. And there's strong demand for assets, not just solely on the performance of these assets, but how they relatively compare with other listed equities in the same industry. So you're not just going to just jump back into investing in the stock market and then you realize the loss. You want to, and you don't want to jump out either because of the panic. I'd say jump out of the market only if you have short-term need for the funds that are in your investment. But if you have the patience, you're going to realize that it's worth the wait to, as this is what's happening in the market now, it's cyclical and it's going to change. So it's time to invest. For me, I invest when the market goes up, I invest when the market goes down. You don't have to really wait, you don't have to buy when the market bottoms out, because truth is, no one really knows when that will happen. I know that there's always a buy and always a seller, depends on if the price is right. And I think demand for stock that I own, there's demand out there. And when I look at history and the valuations, it posits the point that the best time to invest is in the aftermath of a crisis. And when you invest and you do this long term, you realize that you make the biggest returns. I'm already seeing a lot of bargains on both the main market and the junior market. And I will share these on subsequent videos. But when we go back in the market, we're not going to go back with both headway in. I'd say put one foot in first. I urge caution, because the consequences of the lockdown, they are far-reaching, and we really don't know the end either. But I don't want to be late on any opportunity, and at the same time, I don't want you to be acting on ignorance. Call up your investment advisor. Say, hey, mister, this is a good time to reevaluate my portfolio. It's a good time to do a reassessment to arrive at an appropriate asset mix that is compatible with your peculiar financial situation. Try and get some advice in diversifying your portfolio, as nobody knows if the stock market is going to go down or up tomorrow, much less the 6 or 12 months from now. So it is very important that we do not put all our monies in equities. Do ensure that you have cash and cash equivalents. You invest in mutual funds that consist of bonds and real estate and other tangible assets. This will allow us better to be able to reduce our exposure to whatever the market condition exists at that time. Another point I want to make is that we have to be consistent in adding to our investment. This will increase the pace of growth of our investment. And you might be wondering, oh, I'm talking about where am I going to get that extra money from? Our circumstances are different. And so I don't want you to go and take a loan to invest. I don't want you to hastily draw on your 3 months cash holding or cash out on any of your tax deferred investments. Nor do I want you to pull down on your bond either, because these are very valuable to having a stable portfolio. So we have to manage our money wisely, make careful spending decisions, see if we can cut expenses where necessary, review our net income, find an extra amount to put away for emergency fund, and we can still make some money. So we have to find some extra funds to revive our investment. The question I get daily is it safe to re-enter the market? Well, I'd say opportunities are there. What really matters is not just about the entering, but at what price, and what selections you make. So we can find a way to make some money or make back some money. And we don't necessarily have to make it back the same way we have earned it in the first place. So I'm saying seek guidance, talk to your advisor, start an investment plan to recover, and ensure that you review this plan periodically, and do some stock taking. See what you can do to bolster your investment. Also, the budget. You should find some time to review your budget. This is for some ever changing. It's time for us to find some extra sources of income. Try and explore the entrepreneurial route. Start looking at creative ways to find extra incomes, different and separate and apart from your salary. Use the assets that you have to your advantage. Make your assets work for you. So it's not really a time to miss out on the opportunity, but a time to capitalize on the opportunities that exist. So if you have an investment plan, you have any concerns about the viability of it, especially in relation to the overall financial plan, make sure you call your advisor. I'm sure you'll be willing, ready and happy to assist you in navigating these troubled financial times. Many who don't invest now will look at this as a missed opportunity a couple of years down the line. But the investment that you do now, it has to be done prudently. This is a once-in-a-decade opportunity to build a strong portfolio. So there are some things we can change and some things we can't. But regarding the COVID crisis, I say, for the sake of humanity, I hope there's a quick solution to this virus, and it's imperative and that we find one very soon. So thank you for tuning in. This is Asa Bailey on Invest and Recover. We will recover from this crisis. This is going to be one of your biggest financial comebacks ever. So please subscribe to this channel, like, share, and we keep in touch.